Looks like we got somebody here from the insurance commissioner's office, don't we? Yeah, and if some of y'all would like to move over in these front rows, anywhere, even if it's for members, if you want to spread out a little bit, that's up to you guys. Do what? Yeah, and just kind of spread out a little bit, and if you'd like to, Representative Gamble.
Thank you, Mr. Chairman, members of the committee. Good morning. I hope you're doing well today. You should have before you House Bill 241, and I am working off of a substitute at LC 460406S. Is that the one you have in front of you? Okay. All right. And the reason that is a substitute, I met with Stacy Freeman and talked with him about an issue that they had that we have resolved, and so that is why there's a sub in front of you that took care of any of the concerns that they had. But basically, this is a bill that passed the Senate last year, 47-1. And if you're sitting there wondering, well, why didn't we see it last year over here on the House side? It's because it was right as we were breaking for COVID. And as you remember, when we came back from the COVID break, we were on a pretty accelerated path, and there were a lot of bills that basically just didn't get considered because of time and the things that we had going on at that point. So, but I did want to mention that to you. I also want to caution you that the caption of this bill does not quite fully explain what this bill does, and I hope that this morning that we have an opportunity to explain it a little bit better for you. It sounds a lot worse than what it really does, but the Department of Insurance has determined that this is not broad enough to include other policies, but specifically for the extended warranties that we're going to be talking about this morning. But the Service Contract Industry Council and the Motor Vehicle Protection Products Association are proposing or have brought me this legislation relating to service contracts, sometimes called extended warranties. By way of background, SCIC and MVPPA are national trade associations with member companies that include providers, retailers, administrators, and insurers of service contracts. Our primary goal is to establish a uniform, balanced regulatory landscape that minimizes confusion or dispute about the regulatory status of these products. Our member companies or their member companies offer over an estimated 80% of the service contacts in the marketplace today. The bill in front of you will amend the existing service contract statute by permitting contracts for the replacement of lost, stolen, or inoperable vehicle key fobs and agreements to cover excess wear and use charges at the end of the lease to be offered under the service contract regulatory framework. Additionally, the bill would amend the cancellation refund requirements to bring Georgia service contract statutes into harmony with how the service contracts are treated in most of the rest of the country in 3 ways, and I'll outline those in a minute. Georgia is one of 2 states that currently expressly prohibits what we're proposing in this bill, and it's not for any other reason than it's currently just antiquated in our law. So if we do pass this legislation, we will be joining the majority of the other states that either don't expressly prohibit it or don't really necessarily speak specifically to this. The 3 ways, again, is this bill expressly requires service contract providers to permit service contract holders a minimum period of time, depending on how the contract is delivered, within which the holder may cancel the contract and receive a full refund of the purchase price. Assuming that no claims have been made, service contract providers that do not timely provide this refund will be required to pay an additional penalty to the contract holder along with the refund. Second, the bill goes on to require that holders be permitted to cancel their service contract for any reason at any time after this initial period and receive a prorated refund of the purchase price of the contract. And number 3, finally, the bill permits service contract providers to deduct claims paid from a refund that is owed to a holder. Currently, Georgia, as I said, is one of only a handful of states that prohibit such a deduction, and that would be what we would fix with this proposed legislations. Many states take the opposite approach and expressly permit claims paid to be deducted from refunds. Beyond consistency with other states, claims paid deduction in a refund works as a deterrent to fraud. And so that is one thing to consider with why this bill would be ideal. Unlike auto insurance policies, for example, individuals are not required to maintain a service contract covering their vehicle, so these are optional policies. As such, there is a heightened risk that damage could occur to a vehicle prior to the purchase of a service contract. Once a consumer learns about the damage, that the damage is not covered by their insurance policy or would be below their deductible, but could have been covered by a service contract should they have purchased one. In this scenario, a consumer could potentially purchase a service contract subsequent to the damage, make a claim, and have their repair made and covered by the contract, and then cancel the contract and receive nearly a full refund. Allowing a company to deduct claims paid from a refund reduces the possibility of such fraud. So I have James Ross here with us this morning, and he's from SCIC and the Motor Vehicle Protection Products Association. He can speak a little more to what this bill exactly does and what we're hoping to accomplish with that. And so, Mr. Chairman, if you're okay, I'd like for James to join me here and answer any of the questions that the members may have this morning.
Mr. Ross.
Good morning, Chairman and members of the subcommittee. Thank you so much for the opportunity to come and speak to you today. And quite frankly, I don't think I could do a better job than Representative Gamble did describing this bill. Basically, what we're trying to do is streamline Georgia's service contract statute to come more in line with the other 49 states and District of Columbia, as well as ensuring that all parties know exactly how to calculate a refund in the event that one is owed, and provide for that opportunity for cancellations. Are there any questions from the members?
Number 8. It's on your paper under your.
Oh, number 5.
Look on your paper under your.
Oh, okay, I'm sorry. Thank you, Mr. Chairman. Would you go over again the refund, this business about giving back the unearned premium, this about claims made, and then this 10% penalty per month business? Would you go over that once more for me?
Absolutely, absolutely. So generally speaking, how these operate is if I were to go into, say, a motor vehicle dealership and buy a car as well as the contract, a lot of times I would loop in the purchase price of these service contracts into my financing. That would operate to send the full amount of the purchase price for the contract to the obligor company. Now, let's say 2 months into it, 5 months into the term of the contract, I, as the consumer, decide, you know what, I really don't want this anymore. This statute allows me as a consumer, first, to cancel that, and secondly, to get a pro rata refund. So we would take a 60-month contract, say, and figure out what the 2 months worth of that contract is worth. The obligor would be able to keep that money. The obligor on the contract, that is, would be able to keep the money that has been earned, and then any unearned amount would go back to the service contract holder, the person who purchased it. Now, if the contract provider does not pay that refund within a certain amount of time, then a 10% penalty will be charged to the provider against the refund amount. So it'll actually increase the refund amount to the consumer.
Will the consumer really get any money back after you do are they really going to get some money back?
Yeah, they will. They will. I mean, depending, of course, on when they cancel and how much of the purchase price has been earned. But they could see up to the full amount. And in fact, if they return it within the first 20 days after the contract has been mailed, or within 10 days, they'll receive every penny that they paid for that purchase.
And what happens now?
At that point, the contract would be over. It would be void.
I'm talking about under current law. What happens to these consumers now?
So currently, Georgia law uses the short rate, the customary short rate. So even if a customer goes in and decides that they want to try and cancel it, they would have to first be allowed to do that under the terms of the contract. Then they would need to figure out exactly what the short rate amount of that refund would be, which most consumers can't do, and they would then have to try and calculate that and force the obligor company to pay that. The obligor company would have to figure out what the short rate amount of that refund would be and pay that to the consumer as well.
Thank you, Mr. Chairman.
As a reminder, your microphone number is taped to the top of your desk, not the number out in front of you. Number 6.
Thank you. Thank you, Mr. Chairman. I have a couple questions. I talked to Representative Gamble about the bill
Yes.
prior to him dropping it. I'm trying to get my mind around. I understand the long-term goal as far as getting rid of fraud. So I have a couple questions along those lines. How long are the typical contracts for consumer?
These can be anywhere from a couple of months to 5 years. Generally speaking, when we see motor vehicle service contracts, it's usually for 2, 3, 4, 5 years. The key fobs that we're trying to get put in here as well can be the same length of time. For the home side, sometimes they're for a year that are renewable.
And is there a cap on the payment out in order to resolve, whether it's your tire gets, your rim gets messed up, or is there a cap on payments typically with these types of coverages?
Sure. Generally speaking, the contracts will have limits of liability. I don't know if that's what you're referring to, but that's usually just a contractual term.
Okay.
There's nothing statutorily.
Because what it makes me feel like is that we're addressing fraud, which we need to, 100%, but we're guaranteeing insurance. Your insurance, if you pay out, that you get your payments in, and really insurance. But you don't. If I never get a claim, I never get money back. So we're really just eliminating a lot of risk on the insurance company is what I feel like. So I'm trying to get there. I want to get there, but it feels like we're guaranteeing the insurance company is paid, but we're not guaranteeing from the consumer side. And we talk about it as optional, but it's also optional for insurance companies to sell this coverage too.
Sure.
So I'm trying to get there. I'm just struggling. I don't know how to, if I don't use my coverage, insurance does say, hey, great job, here's some money back. But you're basically saying if I do use my coverage, guess what? You're paying you're paying it out. And so how does insurance benefit you in that regard?
Right. So first and foremost, the service contracts aren't true insurance. They're statutorily exempt. But to your point, first and foremost, they are optional. So the customer doesn't have to buy it. There's not any kind of benefit to get better financing or anything along those lines.
And you don't have to sell it.
And you don't have to sell it. That's true.
Okay.
But if a customer decides, hey, you know what, I bought it, I don't want it, they can return it at any time, and they will get their purchase price back within the first 10 days. They'll get the full purchase price back, and if it's after that time, or if a claim has been made, then it'll be a pro rata amount. So I think that there is really some consumer protection that's added to this bill by allowing for that full refund period within the first 10 days. Plus, this really does outline exactly how that refund calculation will be made. Lastly, to be perfectly frank, it's a large industry that has provided significant benefits to the customers. If people didn't want them, then they really wouldn't buy them. So we do see people really getting a lot of value out of these. It is absolutely true that sometimes people will purchase one and will never make a claim, and the car worked perfectly, and that's great. But it does provide that consumer with peace of mind that in case something does go wrong, at least I'm covered.
But in say that case, say something goes wrong, and that happened a year ago, and I'm trying to cancel my coverage. It's an expensive claim. You're still having to pay out. You don't get the benefit of having insurance helping you really, because I'm locked in for that term of that insurance. So if I bought the 5-year plan or whatever, mm-hmm. I had a big claim for $5,000 or $10,000 or whatever, and I'm not sure how much these are monthly, so I'm just making up numbers. Sure. But I have a claim for $10,000, but I want to cancel after a year or 2 years. I've already paid in, say, $2,000. I'm still on the hook for the remainder of what I owe if it never meets that.
No, sir. So
okay.
So if again, so let's say I'm a customer, I go in, I need a new transmission after I purchase one of these things, and
okay.
it's $5,000, and I've only paid $1,000.
Yeah.
Then whatever the refund amount would be reduced by the amount of the claims paid, the $5,000. And if there's not a refund, then I, as a customer, am not on the hook to pay that money back.
Yeah, okay. But I'm still on the hook to pay the remainder of the balance
Not
of
if
the
you
contract.
cancel the contract.
Okay.
You'll get that money back,
Okay.
or you won't have to pay it to begin with if you're paying out monthly.
Okay. Thank you, Mr. Chairman.
Number 14.
Good morning. Bird here.
Good morning.
This is totally new to me, insurance. So I need to ask, from the part of lines 31 down where we're talking about fobs, et cetera, et cetera. Of course, we know that fobs can be extremely expensive. So if I lose it, personal responsibility, I have to pay out of pocket. Is that correct? So with this bill we're looking at right now, anything of these extra things that happen will be placed on my insurance if I so purchase it.
No, so it won't be on your auto insurance. This is a separate contract that you can purchase either at the dealership or thereafter to provide yourself with coverage for things like key fob or tire and wheel, or even some bumper-to-bumper mechanical breakdown.
So this will have nothing to do with my premiums that I pay on my insurance now.
Correct.
Is that correct?
That's correct.
Very
This has
good,
nothing
thank
to do
you.
with auto insurance.
Number 9.
Thank you, Mr. Chairman. Where I'm trying to look through here to see where's the pro rata determined? Is that in this bill, or is it based on the contract?
It is in the bill. If you turn to 140 on page 6. So subsequent to the applicable full refund period, you'll get a pro rata refund as a customer. If you look at lines 143 to 147, that's where the pro rata calculation comes in.
Okay, and that's just a simple pro rata calculation. It's not.
That's correct.
Okay. This
Much
does not-
easier than the customary short rate.
Sure. Okay. And you mentioned that this brings us in line with 49 other states and the DC, in Washington DC, right?
In large part, yes.
Does this? So I'm considering this to be probably model legislation based on other states. Are there key areas in here where this bill deviates from what most of the other states are doing?
So the deviation, quite frankly, I think comes in the realm of the existing statute as it is. I'll say it this way: most other states have defined and exempted service contracts from the insurance code. The way that Georgia has chosen to do it historically is a little bit different. That being said, the cancellation language as drafted in this bill is right in line with the other states. The 10% penalty for a late refund payment is right in line. The full refund period as well, the pro rata refund after the full refund is right in line.
Okay. Thank you.
And to that point also, the key fob that was mentioned before and the excess wear and use is in line with many other states.
I apologize, Mr. Representative Wilson, I'm a little hard of hearing. What did you say about DC? No, didn't you say something about DC?
He said that the 49 other states and Washington, D.C.
Oh, okay. I didn't catch that. Any other questions? Is Cade Colorful going to speak, or you speaking as? Okay. Any further questions for the presenters? Seeing none, what is the will of the?
Just the proper time.
Yes. And push your button again.
I got it. Okay. I'd like to make a motion that we move ahead.
Have a.
Well, do pass with the,
You want to recommend to the full committee do pass.
correct.
We have a motion and a second. All in favor say aye.
Aye.
Same sign, no. That was a yes for me. I wasn't voting no.
Chairman, thank you. I appreciate it.
All right, you can take this on to the full committee. All right, we got House Bill 254. Chairman Lumsden. Give us the LC number you're working off of. I'm sure you will.
let's see here. I've got 241 in my packet. There we go, 254. LC number 460404S. This is a substitute to the original bill. Good morning, Mr. Chairman, members of the committee. I bring to you House Bill 254 with the LC number just mentioned. This is a bill that comes to us from the Department of Insurance, Commissioner's Office. This is a bill that addresses our laws that govern public adjusters in the state of Georgia. As many of you probably know, whenever a claim is filed, an adjuster is a function that comes into play as dealing with the settlement of a claim. You have adjusters that work for the company, and you also have adjusters that are public adjusters. Georgia's public adjuster laws are what we're trying to address here. There are certain things about our laws that are rather lax as you look at the overall structure of laws in other states. This request comes because we know that there are situations where the laxity in our laws permit fraudulent activity to take place on the part of some public adjusters. By and large, we have a good public adjuster structure in Georgia, and we do have very ethical operators, but we also have those who take advantage of the fact that our laws are not as tightly structured as they could be. We have looked at Texas and Florida, who have some very effective laws that govern the operation of public adjusters in the state. So what you have before you in House Bill 254 is an application of those best practices and laws from other states. If you'll look at the bill, it's several pages in length, has 6 primary sections. In short, just to give you an overview of what the bill does, Section 1 gives the department the authority to adopt rules. Talking about the Department of Insurance, it gives the Department of Insurance the authority to adopt rules and regulations to implement this legislation. It says that anyone acting as a public adjuster must hold a public adjuster's license issued by the department. It requires public adjusters to use contracts that are approved by the department. It outlines what these contracts must include, and it specifically bans public adjusters from working in multiple capacities, including as a contractor or an appraiser. With a public adjuster, you might have a situation where the adjuster is also working with providers such as roofing companies or cleanup businesses. So there's a lot of laxity in our laws as it regards to how these operate. Section 4 also outlines fees that can be charged, and that's rather at the heart of some of the comments that you might hear later regarding this. But it also bans contractors from acting as public adjusters on property that they are providing contractual services for, and also bans anyone who has had their public adjuster's license revoked from being involved in any type of business that offers public adjusting services. And Section 6 lists the reason the department may deny an application or suspend or revoke a public adjuster's license. So it's in a quick overview, that's a rather lengthy bill, but those are the primary things that this bill addresses, and is what we're trying to accomplish with that is to give a better structure and put in place a framework that is more that is fairer to the insured as well as the insurer. So the fraud part of this comes into play in large part when we have a natural disaster such as a tornado or a hurricane, where you have multiple type damages that are widespread, and the insurance companies are dealing with these claims. So public adjusters often will be called upon during these natural disasters, and as a result, a lot of times your elderly, folks are the ones that are dealing with them, and a lot of times it just creates an environment where fraudulent activities can occur. As I said, this is a Department of Insurance bill. I have Weston Burleson, who is the representative from the Insurance Commissioner's Office, and with your permission, Mr. Chairman, I'd like to have him come up and say a few words and answer any questions that you might have.
That'll be fine.
Thank you, Chairman Lumsden. Weston Burleson with Department of Insurance. Thank you, committee. We did bring this bill to the chairman. I want to reiterate a few things he said, and then I'm actually, for detailed questions, our executive counsel, Greg Conley's here, who actually drafted the legislation, and I'd be much more comfortable him answering the detailed questions you might have. Did want to say reiterate what Chairman Lumsden said, and that is this bill is aimed at the bad actors. There's great public adjusters in the state. But we have a lady with us who's going to testify later who was the victim of one of these bad actors, and some of the things that happened to her are still legal under Georgia law, and we believe that this legislation would protect someone from like her from happening again. And so with that said, if the committee's got questions, pull up Greg Conley from our office. But
Number 8.
Thank you, Mr. Chairman. I know it's me this time. From my experience, after a storm or natural disasters, you often have people riding up and down the streets that there's hail damage in your area. We'll take care of everything. We'll file the claim for you, and you don't have to pay anything. Will those kinds of things be stopped with this?
here, I'm gonna let Greg talk in specifics.
Thank you, Mr. Chairman, committee. Greg Conley, Executive Counsel for the department. Yes, this bill will prohibit conduct like that. This tightens up not only on individuals who are licensed adjusters, but also individuals who act as an adjuster without having a license. To give you kind of an idea of the focus of the fraud that we're seeing in the state of Georgia, the first point to make is that these frauds inordinately fall on elderly Georgians, rural Georgians, Georgians of color, and Georgians in poverty. People being taken advantage of in these fraudulent cases are people least able to handle this fraud. Kind of the three archetypes of fraud we see. Individuals will come as a public adjuster and make you sign a 10, 15-page contract full of dubious provisions, have you sign the insurance check over to them, take the money, flip it through a couple shell companies, and you never see him again. We have one individual at the department who currently has 12 open complaints against him, who has defrauded Georgians for $925,000 in the last year. The second major type of fraud is contractual, where an individual will come in and say, I'm going to be your public adjuster, but the contract allows me to act as a contractor, an appraiser, a plumber, a roofer, et cetera, et cetera. And so then he charges you, your contract says this is a 10% fee for my services. It's a 10% fee for the services, and then he charges you a 50% fee for the contracting services, a 25% fee for the appraising services, and essentially ends up taking your entire recovery, and in fact will hold the check if you disagree and not pay out. And I believe Ms. Ellis is going to address that. The final kind of major fraud we see is an individual owns a contracting company and is a public adjuster, and then adjusts your claim and then acts as the contractor on the claim, and essentially there's a serious conflict of interest there. So we looked at, as Chairman Lumsden said, we looked at the laws of Texas and Florida. Florida, because we kind of want to be in line with the states around us, and also Florida experiences hurricanes. And Texas, because in consultation with departments of insurance around the country, Texas does a pretty good job of regulating public adjusters. So the vast majority of this bill is actually pulled from other states. We've seen these provisions in practice, and we know that they work. So I'm happy to take any detailed questions you might have about the bill.
Thank you. Mr. Chairman, do you have anybody else with you to speak to the bill?
The insurance department, I believe, had.
Yeah, okay. We got a list here.
Yeah.
All right.
Forgive me. Good morning. My name is Margo Ellis. Excuse me. Back in 2018, my house was hit by tornado. My insurance didn't want to pay for the damages to my roof. So I was advised, thank you, to hire a public adjuster, which I was given a phone number to contact a public adjuster. And this was independent of my contract, independent of my insurance company. So this person came in and said, I'm the greatest. I'm the only one in the state of Georgia that has jurisdiction over the southern states. I'm great, I'm great. Here's my contract, power of attorney. I trusted that because I don't know any better. Fee on the paperwork was $4,500. So I'm thinking, okay, it's $4,500. It takes months upon months upon months to get any resolution to reach out to him. He's telling me to do the work that he should be doing. Contact this, my insurance company wouldn't even talk to me. So by the time he gets the check, he sends me a text picture of the check and tells me I owe him $13,000 and that he wouldn't sign it unless I gave him $13,000. If I had $13,000, I would have fixed my own roof. I'm sorry. I had to go to court because this man told me I couldn't say anything to anybody, talk to anybody, say anything to anybody. As this kept going on, the cost started increasing to $17,000, and it ended up being about $27,000 of a $40,000 claim. So I got Harry involved. Better call Harry. Contacted them. So he sued me, the state, the commissioner, and the attorney general at the time. This is still in court because he infringed upon my right to complain. All I asked him was for an itemized bill. Why is it $13,000? And then here comes the collections, day after the check. I get a collections notice from his attorney because I asked for itemization of a bill. That's my right as a consumer. So this case is actually still in court. I did get the money to take care of my roof, but to be put through all of this type of things and be called names that you've never heard just other than your birth name inside of a courtroom, it's hard. It's hard. But I thank you for hearing me today. Mm-hmm.
Thank you. I got a question for the department. Attorney, would you come back up here, please? Explain to me this situation. Why insurance company didn't step in and help her? What's the problem? What am I missing? What am I missing here?
Why does the insurance company not step in?
It's kind of like the insurance company wouldn't even talk to her. What happened here?
So currently under Georgia law, it's legal to sign a contract in which the customer is not permitted to speak to their insurance company. So the situation you just heard is permitted under Georgia law right now. Okay. And so that's why that's an issue. In
other words, she or somebody signed that release from the
right. Then and the contract that she signed, I'm familiar with, is sort of an absurdity, but that's kind of what produced the situation.
Okay. Thank you, sir.
Sure.
Michael Fusco, is that how you pronounce that name? Fusco? Fusco. Get up here, Mr. Fusco. I like my pronunciation better.
Yeah, it's so much easier. It's actually spelled better that way. Mr. Chairman, good morning, and good morning to the committee. I'm heartbroken to hear the story of this young lady. I've been a licensed public adjuster for 43 years. Our office is here in Georgia. I've worked with legislation in 4 other states. And I think it's time that Georgia has the same type of laws to protect the consumers that other states do. I've worked with the Department of Insurance and the Commissioner's Office closely on the bill. And I believe that our industry bears the brunt of the bad actors that take advantage of people in the street. My company does large, complicated commercial claims, and we rarely get involved in these type of matters. But when there's an issue on the news, we see and bear the mud that's thrown against the industry. Our industry does excellent work in protecting the consumer against insurance companies for the simple fact that it's up to the insured to become an expert in preparing and presenting their claim once they've had a claim. And most people are just not adept at that. And I can tell you that as an industry, we produce outstanding results for the good companies. I can also tell you that the best practices of the good companies are that correspondence is shared with the client so that the client knows exactly where their case is as the case progresses through the various stages of the claim. The one thing I would like to talk about in detail is the fact that there are unscrupulous contractors out there that take advantage of everybody, whether they're a simple person or very large, because of the conflict of interest. They cannot act as a public adjuster and a contractor, because the client then has no check and balance to know how much he should have collected and how much the repairs should be affected. The license of a public adjuster is regulated to represent only the public. So if a contractor is representing his company and that individual, he is in direct conflict with his license. And I would in the bill, there's provisions for the Commissioner's Office to address that, and I would ask them to be very vigilant in addressing that matter.
You are a public adjuster?
Yes, sir. I think I employ the largest staff of public adjusters here in the state of Georgia.
How do you become a public adjuster in Georgia?
You have to pass a multi-lines exam, which is the same exam that a individual representing the insurance companies would have to pass. You have to qualify for a bond and a background check, and then you have 15 hours of continuing education requirement every year to maintain the
ethics
license.
and.
Yes, sir.
What kind of oversight does your organization have, through which organization, I might say, for discipline or license pulling or?
It's the Office of the Commissioner. There are various organizations. There's a local Georgia organization. There's a national organization, and so on. And, you know, as a courtesy, we maintain, I guess, membership in those. But I find that my relationships have always been with the public and with the Insurance Commissioner's Office directly, because, you know, at the end of the day, the folks who license you need to know you and how well you do your job.
Okay, you're licensed through the Insurance and Fire Commissioner?
Yes, sir.
Okay, thank you. We got about four more people want to speak to the bill. If you could, it doesn't look like any of you might be together, kind of a little different organization except for AAA. So I'm going to call on Matthew Mulholland first. Tell us who you're with, and if you could, about 4 to 5 minutes, if you could, please, or 1 or 2, but speak your mind. I don't mean that to cut you off short.
Thank you. My name is Matthew Mulholland. I am the current president of the Georgia Association of Public Insurance Adjusters. I'd like to start off by thanking Ms. Ellis for her testimony. We definitely don't want to let that kind of behavior continue in this state. We'd like to thank Chairman Lubsden for his kind words about public adjusters earlier. The Department of Insurance has been working with us to work out some of the language of this bill. We'd like to thank them for that as well. We do agree with the intent to get rid of bad actors. What we are concerned about is the language is broad in places, and it could end up having unintentional consequences against consumers. So we would like to continue working to shore up some of the language so that there aren't any unintentional consequences. these laws and the wording that has come into this bill, they were pulled from Texas and Florida because those states have good, strong language in their bills. But there is a lot that goes on in Texas and Florida with other consumer protection laws working in tandem with it that prevent some of the issues that we anticipate might occur here. This isn't the easiest state to work as a public adjuster. I could leave it there and keep it brief for you.
Okay. Quick.
Mr. Mulholland, can you point to any specific areas of concern you have, or one or two of them?
Yes. One of the things that and I apologize, I don't have a copy of the most recent change, so I don't know if some of the things had already been addressed or not. Thank you. We did make some headway with the department on certain items. Some of the other items that we were a little bit concerned with included the broad range of scrutiny over what is or isn't considered, for lack of a better term, bad. You know, there's definitely language in here that is just slightly off. It could have a little bit or one extra line added on that could shore it up. There really isn't a lot that is majorly concerning, but there is one general concept that seems to be left confusing. When they say they don't want a public adjuster working with a contractor, for example, what does that mean? Obviously, we agree that there would be a conflict of interest if they are a contractor on the same claim, but does that mean that a public adjuster can't work with the contractor that the policyholder has hired in order to make sure everything gets done properly? Get bids from that contractor to submit to the carrier. It's just confusing. So we want to just be able to continue working with the department to shore up some of this language. We'll get to the point where we believe we can support the bill.
Thank you, sir.
Thank you.
Michael Lindhurst. Is that correct? Michael Lindhurst, AAA America Adjuster. Oh, I got you. Sorry. You're behind the pole.
Good morning. I'd like to thank the the committee, as well as Chairman Lunsden, for the opportunity to come and talk to you guys today. I also feel like I owe everybody an apology for sending such a long breakdown of our issues with the bill late yesterday. This just got sponsored and introduced, I believe, about a week ago, so we've been scrambling to try to put our thoughts together. Made a long drive, got up at 1:30 in the morning to come here today to speak with everybody, and I'm hoping that I can have a very open Q&A about the contents of the bill and some of the reasons why we have some issues with it. I also want to make sure that I'm giving the other side of the story. I think one thing that's been missing from the conversation today is the fact that there's not one word of this bill that imposes any additional regulations on the people that actually do have a conflict of interest with the policyholder and the consumer, and that's the adjusters that work for the insurance companies. All of this is centered on the people who have an alignment of interest with the consumer, and that's the public adjuster who not only shares in the time risk, but also the cash risk of trying to put these cases together that have been systematically denied and underpaid by the insurance company. The only time that we really get involved in cases is as a foreseeable consequence of the insurance company adjusters not doing what they're supposed to do to pay the claim correctly. Otherwise, they simply wouldn't need representation. So I think a lot of that's been missed of where the conflict really lies. The conflict is with the insurance company and with the consumer. They have a conflicting financial interest. The less the insurance company pays, the more money they make. They're for-profit companies. So I put together a very comprehensive 11 pages of information bullet point, and while I don't want to spend a half an hour going through this, I would love to have an open Q&A about some of those fundamental differences, but also to drive the point home that we do have 3 different kinds of insurance adjusters that are licensed by the state of Georgia. Well, two. There are 3 insurance adjusters, 2 of which are licensed. Staff adjusters that work directly for insurance companies are not licensed and not required to be licensed. Independent adjusters that are third parties but still get paid by the insurance company are licensed, and then public adjusters only work for the consumer. So simply, we are the only ones in a fiduciary capacity that work for the consumer, and this bill solely centers on consumer advocates, not the insurance companies. So that's our main issue of contention with the bill, is that we believe that it should be a balanced regulation, also to impose similar regulations on the insurance company adjusters. This bill simply obfuscates from that completely. There's no language in here at all. And again, why would you continue to overregulate the consumer advocate and not the people on the other side that have the true financial conflict of interest with the consumer? To speak to stories that we've also heard in the marketplace, similar to yours, man, which I can empathize with, and with all due respect, I've heard much more of those stories about the insurance companies not doing their jobs that have created those same types of issues. So without addressing that as well, we cannot support this bill in its current form. So
you've got 11 pages there. Have you submitted those to anybody?
we have. We sent it to the Department of Insurance late yesterday, and we also submitted it to all the committee members late last night. And it's a lot of information. I would love to have the opportunity to touch on each one of those things. I have a suspicion that this is probably you're not gonna allow me to stand up here for an hour and a half. So for the sake of brevity, I'd love to hit some of the high notes, and if anybody has any questions, I'd love to jump to those points of concern and address those.
Saying you want to hit some high notes now?
Sure.
Let's start humming.
Let's go. Let's go. So, high note 1. The word fraud doesn't show up anywhere in the statute. This will not stop fraud from happening. Simply will not. Okay, fraud is criminal and civil in nature. That is for civil courts. That is for criminal courts with the ADA of the AG's office. This bill does literally absolutely nothing to curb fraud. Nothing. So that is a fallacy, unfortunately. Criminal conduct is criminal conduct. And if somebody steals money, they should go to jail and they should pay restitution. That is not the job of the insurance commissioner to promulgate that authority. That's for the Attorney General's office. There are model acts that have been put in place by the National Association of Insurance Commissioners. Okay, these are models that they use bits and pieces of to codify into state laws individually. Some of these provisions are from Texas and Florida that are very anti-public adjuster and therefore very anti-consumer. The NAIC model acts were put in place to be used as a model for the codification into individual states. The vast majority of these provisions are a complete departure from what the National Association of Insurance Commissioners have already suggested to be used to codify into state law. And I think that that should be troubling. That is the insurance commissioners, 50 of them, that get together and make these model acts and say, please put these into place. One of the things that they do put in place is the ability to disclose conflicts of interest. It seems that the people who just testified believe that there's a conflict of interest between, for instance, a contractor and a public adjuster. And if it's disclosed, the NAIC has 2 provisions that are very clear in their model acts that say you can disclose to a consumer if there's an interest or a payment coming from one or the other, and that disclosure eliminates the conflict. The NAIC Model Act contemplated this years ago. This was 25 years ago that the NAIC got together and put these provisions in place. One of those provisions in Georgia is already codified into state law, and this would remove that. So what you have in the marketplace right now, everybody was talking about hail claims and those types of things and the relationship between contractors and public adjusters. Well, what typically happens is somebody has a claim on their house, whether it be a tornado or a hail or a wind loss, and the contractors many times will meet with the insurance company adjuster to point out what's wrong. And if they believe that there's a shortfall in that or disagreement, then they would refer the case to a public adjuster as a licensed person already licensed within the state of Georgia. This separates those interests to the point where you can have what I see a lot with insurance companies is a divide and conquer strategy, separating the interests that are aligned between the consumer, the contractor, and the public adjuster. And all that does is harm the consumer. I've seen this in other states where insurance companies very aggressively try to drive on those conflicts of interest, and the person holding the bag is the consumer. So we are very much opposed to any provisions that would take away codified law from Georgia to allow those interests to be aligned, and they should be. As a metaphorical example of this, I went to the doctor recently, and at the doctor's office, the first thing they have you sign is something called an assignment of benefits. So that assignment of benefits allows the doctor to negotiate their rate for a surgery that's done. That's the service provider. In this case, it would be a contractor in a hail claim or some other claim. There are no public adjusters in the medical field. Similarly, there are no public adjusters in the auto repair industry. So what we have here is a situation where they're trying to remove the voice of the service provider, the person that's actually doing the work on the house, and not even allowing for a disclosure to the consumer to align the interest of licensed representation, the person doing the work, and the person who's been affected by the peril. That's a big problem. The reason I say it's a big problem because I've seen this in effect in other states. We work in dozens of different states, not just in Georgia, and that has been very problematic.
If I could,
Yes,
we
sir.
need to see if anybody needs to ask you a question, because we've got like 5 more minutes.
Yes, sir.
I got one more presenter I really need to get up there.
Absolutely.
Any questions for the 14?
Yes, thank you very much.
Yes, ma'am.
Again, I will repeat, I have no clue about insurance. So, the bottom line right now, according to this bill, is that the state wants to regulate public adjusters because of bad actors. Would that be a correct statement or not, instead of free market? Number one. Okay, so then if this bill were to take place, the Department of Insurance would then have the ability to decide of how much money you would be charged for any kind of adjuster. And then the last one, everything that you would do as a public adjuster would have to then go through the Department of Insurance, such as commercials, advertising, etc. So instead of free market, we are now looking at more regulation for public adjusters. Are all those questions kind of go together and make sense?
I would say yes. So the advertising issues, and I'll speak directly to Texas because Texas has some of these issues too, where you actually have to take your contracts and they have to get sent into the Department of Insurance. They have to approve them. The NEIC Model Act simply has a list of things that need to already be in your contracts, and it creates this very clunky environment to get contracts approved. And simply, I don't think that the Department of Insurance is going to want to look at every flyer, every commercial, every spokesperson's spiel to approve that. That would become extremely, extremely onerous. I mean, that is, forgive me for saying that's draconian. It would be an insane burden on the Department of Insurance to have to do that. It actually goes even further beyond what they do for attorneys. And attorneys are so highly regulated, and a lot of these provisions go past attorney regulation. A lot of them do, including those. So, but the percentage issues, I think, just to speak to that real quick, I know that GAPI and the Department of Insurance have talked about certain caps on how much a public adjuster can be paid. There's been talk of a 10% cap, which creates a major economic issue for smaller claims. For instance, we operate on contingency. So if there's a $10,000 claim and we have to do 50 hours of work on a claim, it's not economically feasible to take those claims, which leaves a market failure. Consumers can't get us to work for them. So any caps that are on these contracts that are unreasonably low, this is yet another departure from the NEIC Model Act. The Model Act says only for declared emergencies. Hurricane Michael comes driving through the state, then there's caps, but only during that period of emergency. This one has a sweeping cap on every single claim. That's bad for consumers. So,
Okay, that's, we got other people who got to go to the rules meeting, and I apologize
Yes, sir.
for that. So we got one more speaker, and I want to give them the opportunity. We've got 2, but one of them's with your organization, so I'm going to go to Douglas Quinn.
Thank you for your time.
Thank you, sir. Is there Douglas Quinn here?
Come, sir.
Can't see you behind the pole.
Good morning, ladies and gentlemen. My name is Doug Quinn. I'm the Executive Director of the American Policyholder Association. We are a 501c4 consumer watchdog organization that promotes fairness and integrity in the insurance claims process. I'm also a member of the Coalition Against Insurance Fraud. I'm also a former victim of insurance fraud perpetrated by the insurance industry. Came here to talk about this legislation or this proposed legislation, and the basic concept that we have some concerns here. And we are in favor of regulating all parties who are involved in the insurance claim process. Anybody that has an American family's financial well-being in their hands should have some licensing, training requirements, and regulation. But there needs to be parity on all sides. And the problem we see here is the claims process is an adverse process. As much as we watch all the TV commercials that tell us we're in good hands and they're on our side, the reality is when it comes time to a claim, the insurance company and the policyholder, the consumer, their interests are adverse. There's nothing wrong with that. Many contractual obligations are exactly that way. Where it becomes a problem is on the insurance industry side. They've got lobbyists, they've got millions of dollars, they have armies of attorneys, they have claims managers, adjusters, engineers, and the policyholders in most cases are alone. Most people filing a homeowner's insurance policy, this is their first or second time filing a claim on their policy. And UPPA laws sort of limit the ability of their contractor to speak. Any kind of legislation, like 1% to 2% statistically, will hire an attorney. 5 to 10% of the people will hire a public adjuster. Most people, an overwhelming percentage of consumers, go it alone with the insurance company, who has all of the power. They make the final decision on what's going to be paid on that claim, and they have all of the expertise. So it's almost like saying, hey, your first day of Little League practice, and you're 8 years old, and the coach tells you, hey, kids, we're going to go play the Atlanta Braves this weekend. You're going against the professionals. Good luck. So one of the things we want to make sure is that we are protecting consumers' access to professionals. It is very, very important. We would actually like to see more people use professionals in the claims process if they feel as though they're not being treated fairly. We do understand that process, that imbalance of power, creates a system that is ripe for abuse and ripe for fraud. And I want to be very clear about this. Criminal fraud happens on all sides of the insurance claims process. We know that in this country, 99% or more of fraud prosecution is done in defense of insurance companies. And there's a specific reason for that. Many, many cases are actually walked to prosecutors by insurance company SIUs. There are very few people actually looking at the carrier side, the adjusters, the engineers, the vendors that they hire. So policyholders are not particularly well represented in fraud prosecution. So we want to make sure that we are keeping people open. So we believe that there should be, we're against all fraud on all sides. There should be regulation, there should be training, there should be licensing requirements, but two things. All regulations should be done with the guiding principle that we are protecting consumers' access to professionals who are on their side. When you talk about a public adjuster, that's one of the few people that can actually stand up for a consumer in this case. The other thing we want to see is parity. I believe one of the previous gentlemen, previous speakers mentioned it. We want to see parity so that any requirement for a public adjuster, for an attorney, for anybody standing up for the consumer, those requirements for licensing, for training, for ethics requirements, for contractual obligations also applies to the insurance industry. We should not be giving one of the most powerful industries in the United States that kind of power to not have the degree of regulation and oversight that consumers have.
I think we get the gist of it. Tell me again what the American Policyholder Policyholder Association. Tell me a little bit about your organization.
We are a consumer watchdog organization. Because of the lack of balance with prosecution, primarily being done for fraud prosecution in defense of insurance companies, we actually focus on the insurance industry. We're the only organization in America that focuses on carrier-side fraud and license violations on the insurance industry.
Being a textile worker, sometimes I'm a little slow. I'm being serious now. Of course, it might be very obvious to most. So you're saying that in courts, maybe the consumer's not getting a fair shake compared to the insurance company?
I am 100% saying that, sir,
Okay.
and I feel that we all sort of know somebody that has had a bad deal from their insurance company.
I thank you for your presentation. I'm glad to move along if you don't mind. I mean, we could talk. We know what you're. I'm not cutting you short, but I guess I am. We know what you're saying. You don't agree with it. This bill.
You know what? There are facets of the bill. Again, we agree with the need for regulation. There are facets of the bill that are somewhat, I almost want to say sloppy, forgive me, or amateurish, when the NAIC already has regulation in place that's been used all over the country. And I'm curious as why not just to defer.
Who already has regulations? What?
The National Association of Insurance Commissioners. Okay. They already have model legislation that does exactly this, and I'm just curious as why you're not looking at that. Like this bill, I would suggest, comes off the table altogether to be reworked and maybe start from what's working in other areas of the country.
Okay, thank you, sir.
Thank you.
I'm going to do something. I'm going to call the insurance department back, both of you back to the podium, if you don't mind. Now, I, you know, from a farmer, textile worker standpoint, I thought the fire and insurance commissioner was driven to protect the consumer.
That is correct,
what
sir.
you do?
Yes.
Okay. I was under the impression days ago, without just kind of on the surface, that this bill was supported by the Adjusters Association, but I guess it wasn't. But tell me again, what's your goal? What the purpose was quickly, and what you've seen, and if this bill you think is needed, considering what we've seen in Georgia.
Yeah, I mean, I'll go first. I think the goal of this bill is to go after the bad actors, and I think there's loopholes in Georgia law that they exploit, and they take advantage of consumers. We're not trying to be heavy-handed with the industry. I think we modeled what several other states already do, including your neighbors to our south, who typically aren't the most big government folks in the state. And from what we understand, when storms come through, a lot of those adjusters in Florida will actually come up here because our laws are lax. And so, there's, we've had some conversations with the industry. Someone brought up the 10% cap. There's no longer a 10% cap in the legislation. It's actually 33.3% is a total cap. And then we have the right to determine if, based on what the work was, if that's an unreasonable cap in any specific instance. I think Greg could maybe speak to a little more on the disclaimers required on the advertisement. I don't think we'll review every single piece of advertising that goes. We'll just have there's regulations that they have to follow, and if it's pointed out to us that someone's misrepresenting themselves or not following the guidelines, then that's when we would have a chance to act.
Yeah, so I would say that some of those provisions they are consumer protectionists, and they actually also do introduce parity. You can't, if you're an insurance agent, you can't write contracts that we don't approve. The reason is because it's very easy for an insurance agent to take advantage of a consumer, right? The approval process is not an onerous process. It's certainly not draconian. We have 200,000 licensed agents in the state of Georgia and 1,800 insurance companies. We review and approve all forms and rates that they submit. We do it timely. We do it every year. When it comes to reviewing advertisements, up until recently, we regulated the industrial loan industry, which was moved over to banking and finance last year. Part of the reason, one of the regulations there was we also looked at all of their advertisements. The reason is because in the industrial loan industry, it's very, very easy to take advantage of consumers with misleading advertisements. It was not onerous. It was not even difficult to look at all those advertisements. So this is not an undue burden, nor is it difficult for us to do. Finally, I would argue, or I would simply state that we have a lot of laws directed at insurance companies and directed at agents, and those are certainly conversations we can have. Those are also different code sections, and we're not writing an insurance code omnibus bill. This is a bill directed at extreme situations in the adjustment industry, which frankly is the #1 source of consumer fraud that we see.
Thanks, sir.
Sure.
Thank you a lot. What is the will of the committee on this bill? We have a.
I have signed up to speak. Can I have 2 minutes?
Are you with the AAA American?
I can be, or I can speak in my own personal capacity. Just 2 minutes, if you don't mind, sir.
Okay, I guess I didn't accept that motion, but go ahead. What is your name?
Joshua Friedman.
And what is your name?
Joshua Friedman.
Okay, Joshua.
Thank you. Thank you so much. Distinguished members of the House, my name is Joshua Friedman. I studied at Liberty University and began my entrepreneurship career as a contractor in 2010. I quickly developed my career as a contractor, but a real knack for helping my clients in insurance jobs by beating bad actors among the insurance companies at their own game. I never really enjoyed the construction trades much, and there are people far more qualified than me to do those things. However, I found my true calling in 2014 advocating for policyholders to their insurance companies. I took the 40-hour licensing course, aced my state board exam, and became a licensed insurance adjuster so that I could duly represent my clients with the power of the Georgia Department of Insurance standing behind my license. Since then, I've built an incredible relationship with individuals in this policyholder advocacy industry. Many of those individuals are in this room. Some of those individuals are here for different organizations than I represent, but at the end of the day, there's no doubt that they're here to serve the public. Even today, in an age of accountability of government agencies and corporate entities, insurance companies get away with exploiting the consumer. They resist accountability in a year of record profits, crying foul and threatening to raise premiums if they are forced to pay proper or code-compliant repairs to damaged homes. They need policyholder advocates out of the picture, and House Bill 254 moves them closer to that objective. We are counting on you to stop it. They will be restricted from paying their representation out of their settlement due to the way policies are written, having to take on thousands of dollars of debt to pay representation because settlement funds are off limits. Minorities and low-income families will be disproportionately ravaged by less access to the representation they so need, the representation they're entitled to. And I think that that is an issue that we have not discussed here. The fact that your public adjuster fee, when you hire a personal injury attorney and they get you $1 million settlement at a 40% contingency, you pay them out of the settlement proceeds. Georgia's laws and the way policies are written today, so a little bit of history for you. In 1958, that was the year that the first public insurance adjusting firm became a thing in Florida. Then in 1971, the ISO, who writes the model risk forms, they were created. So one could say that public adjusters actually predate the current risk forms that would allow us to be paid out of the settlement. It doesn't work anymore. So if Ms. Jones's house burns down and she has a $350,000 claim that a public adjuster settles for her, that $35,000 fee now has to be paid directly out of her pocket, and she can't touch the settlement proceeds for that. That's a huge problem. So in closing, ladies and gentlemen of the House, the DOI came to the Georgia Public Insurance Adjusters for our input on drafting a consumer protection bill. What they sent us was a consumer nightmare bill. We worked tirelessly to help come up with a bill that would protect consumers from every predator the insurance industry would see them harmed. Before even meeting to review our input, the bill was rushed to your desk. Right now, the nation is watching you to see if the insurance lobby will get away with finessing this anti-consumer legislation into law. So goes our state, so goes others. That means all eyes are on you, ladies and gentlemen of the House. On behalf of Georgia consumers, I beseech you to send this bill back to the Georgia Department of Insurance so that public adjusters, the industry experts on policyholder advocacy, can help amend this bill into a genuine industry reform bill that protects consumers. With all eyes on us, let's deliver something that we can be proud of. When other states follow our example, let consumers be the ones who are protected, not the insurance companies. Thank you.
Thank you, sir. We obviously, as everybody's witnessed here, we got, as we say, we got a bunch of people for it and a bunch of people against it, and we got the consumers' best interest at heart. And the insurance department has stated this is where they're headed with this, so I would entertain a motion to the will of the committee for this bill. We have a motion to pass. We don't have to have a quorum for a, have a motion and a second. All in favor? Aye. All opposed? No. I'm going to ask for a show of hands. All in favor of this bill, raise your right hand. All opposed? Thank you. It will go on to full committee. Thank you.